Good morning. This is the live market open for Monday, November 2nd. We have a new month. I'm Yohay, I'm a Forex Crunch and Market Movers, and doing the show for FX Read as usual. Hope everybody had a great weekend. As always, we'll talk about recent developments, charts and levels, the next 24 hours, and of course your questions. So if you can't see the chat box below the screen, below the video, please go to tlk.io/fxstreet-forex-live-video. Okay, so what did we have on Friday? Well, we had Eurozone inflation, which came out marginally better than expected. Core inflation came out at 1% instead of 0. So that's, instead of 0.9, so that's good news. And headline inflation came out at flat 0. Okay, nothing extraordinary in that, but the core inflation is moving higher. That allowed the euro to do a mini rally before selling off because of end-of-month flows. Okay, we had lots of US data. All in all, was quite mediocre. The most important figure remained the same. The core PCE price index, it remained at 1.3 year over year. So the Fed doesn't have really new data. And Canadian GDP came out okay, allowed the Canadian dollar to recover. Nothing here was also expected. Over the weekend, we had Chinese PMIs. They actually came out a bit mixed. So let's take a look at the data. First of all, the official PMI came out worse than expected, still under 50 points. That's surprising because the government usually wants to show us a better picture of the economy. But the Kashin manufacturing PMI, the independent measure, actually beat expectations. So if you look at a more reliable source, so to speak, it actually came out better than expected, 48.3 instead of 47.5 expected. Remember, it's still under 50 points. And that means, of course, that manufacturing is in contraction in China, the world's second largest economy. But that was good for the Aussie dollar, which managed to rise a bit above the 71 level. Still far from 72, 72.80 next support, but at least it's recovering. Okay, so we had this bottom here at around 70.65. All right. So that was sort of good news in the wake of the new week for the Aussie. Okay, I mentioned euro dollar. Let's move to that chart. Euro dollar had sort of falling down out of the window and climbing up the ladder, if you wish, last week. It happened twice. First of all, it recovered from the ECB's blow all the way here up to just above 110.70, just to fall, crash once again because of the Fed. Then climb, reach again this level, 110.70, and fall to 110. Now, in the wake of the new week, we had it opening higher. 110.42 is the new level, quite constrained in range. Okay. What else do we have? Oh, we had Australian building approvals. They came out in the context of the Australian dollar. Of course, well, it's quite a wild ride. Anyway, they came out at a rise of 21.4% that also supported the Aussie dollar. Okay, before we move on, I see we already have some questions. So good morning, Jean. Jean says, good morning, Yohay. My question would be, why, in your opinion, euro dollar opened this week with a gap? And do you think it is going to close the gap and retest 110? Well, why do I think it opened with the gap? Well, first of all, we had some sell-off on Friday, late on Friday. Okay, this move here. It fell from the highs after the London fix, after what we had sort of last moment US dollar selling to get the prices in correctly for the month, the portfolio rebalancing. We had it crash all the way back to fall all the way to 110. So now we're seeing it sort of stabilize back in the old range of 110 to 110.70. Secondly, we have the PMI figures this morning from Europe. So maybe as we had okay figures last week from the preliminary numbers, maybe we're expecting more of the same today. But do I expect it to test 110 once again? A lot depends on the US data because that's more important today than Eurozone data. So we have Eurozone final manufacturing PMIs. Let's look at the calendar. We have quite a few of them actually during the show, but they can go in mixed directions. So the first one we have is at 8:15 GMT from Spain. we're expecting a small rise from 51.7 to 51.9 right here. Okay, it's a bit off the highs that we've seen in the past from Spain. So the Spanish manufacturing sector is not growing as fast as expected. And then we have the same figures from Italy. Here also we're expecting a small rise from 52.7 to 52.9. Then we have the final figures from France, Germany, and the whole Eurozone. So we got the preliminary numbers, and these are final numbers that are basically expected to confirm. So this is already after the show, more or less. 50.7 in France, 51.6 in Germany, right here. And for the whole Eurozone, of course, we have other countries as well. It's expected to stand at 52. So today is PMI day all over the world. What is PMI? It's a Purchasing Managers Index. That means that this organization, this private company called Market, surveys the various purchasing managers at top companies, usually a few thousands of them, and asks them what their views are about the economy moving forward. What is the current situation and what they expect moving forward. So this is considered a relatively reliable measure to forecast the future activity. Okay, and the manufacturing sector, even though it's less active than the services sector in many countries over the world, it still carries importance, especially in countries like Germany. But also in the United States, where it's very small, it's closely watched. Okay, so when we look at the NFP, it's more important to look at the services PMI, the ISM non-manufacturing PMI, and not the manufacturing. But if we see more manufacturing, I think it creates more jobs because you're creating real stuff and not only selling services. Okay, so today we have from Market and from ISM in the United States, the Purchasing Managers Indices. Okay, so let's move back to the events for today. I see, good morning, Rob, good morning, Tol. We have this more of the same also from the UK. Here it's not a mix of countries, here it has a bigger impact. So pound dollar dropped last week below this narrow range of 153 to 153.70, and then found here support at 152.50. Didn't go actually too far, and then towards the end of the week, because of the dollar sell-off, end of month fixing, we saw it rise once again. We're back in the range 154.30. Now, if the European manufacturing PMIs can have mixed reactions, and some of them are just a confirmation of the initial numbers, in the UK, it's the first and final number, and it has a big impact. So in the UK, we're expecting some kind of slowdown. Recent months have been quite stable and quite low. Remember, the 50-point mark separates contraction from expansion. So if it's under 50, it's bad news. If it's above 50, it's good news. Okay, we're expecting a small slide from 51.3 to 51.5 to 51.3. This will be at 9:30 GMT after the show, and this should have a significant impact on the pound. Okay, and then the most important PMI comes from the United States, but it's not from Market, it's from another company, a US-based company called ISM, Institution for Supply Management. So we also have the market figure, right here. Okay, market manufacturing PMI, 15 minutes earlier. You see we don't have expectations. Anyway, it carries less weight than the ISM manufacturing PMI, which is expected to slide to a very balanced 50. From 50.2 to 50. 50 is exactly the borderline between contraction and expansion. Of course, if we get under 50, it will we'll have these flashing red lights in various places in Washington and other countries as well. So it'll be a bit worrying for the US economy. If we have above 50, of course, it's good news. One of the figures, there are many components inside this manufacturing PMI. One of them is the prices. So this has been a very low, naturally, because of oil prices. We expect it to remain more of the same, to rise a bit from 38 to 39.5. But as you can see here, in the past year or so, it has been quite depressed. And it's been last time at high levels only back in late 2014, before the crash in oil prices. Another figure to watch here, we don't have it on the screen, in the calendar, but that's the employment component. So if it comes out better than last month, it's good news for the US economy, and a good hint, positive hint for the non-farm payrolls on Friday. Okay, so this Friday is always the first Friday of the month. The United States releases the all-important jobs report, the non-farm payrolls. So we have that. We'll talk about that, of course, during all the week. And if we have better than expected numbers, it raises expectations for the NFP. And if we have bad numbers, it's of course negative, lowers expectations for the non-farm payrolls. Okay, so that's the main event for today for the US dollar. If we have better than expected, so this will sort of determine the direction of the US dollar across the board. Another event we have today, we have the Fed's John Williams, the president of the San Francisco Fed, talking. Let's see if he'll say anything meaningful. We talked quite a bit in the recent past, but he hasn't said anything of importance. This is the first time he talks after the Fed decision last week, which was quite hawkish. We can repeat that and why the dollar went up if we have time. Let's talk about the events also tomorrow morning. A big event here, Australian rate decision. In Australia, the RBA officially is expected to leave the rates unchanged. Okay, 2% once again. We had it raise rates after the crisis and then having to cut them back down again. In the past year, we had 2 rate cuts, from 2.5 to 2.25, and then once again for up to 2%. Okay. Now, what's the reasoning for a rate cut in Australia? For a rate cut, we need, the RBA needs to be worried about China. There are reasons to be worried, of course, because the Chinese import less Australian goods. In addition, all 4 major banks, Westpac began, but then the others repeated. They decided, because of regulatory changes, to lift the mortgage rates. So now if you want to take out a mortgage in an Australian bank, you'll have to pay more. And this is a reason for the RBA, for the central bank, to lower rates in order for the mortgage rates to return back to normal. And you might be worried about, if you're in the seat of Glenn Stevens, the governor of the RBA, you might be worried, of course, about the Australian economy outside the mining sector as well. It's not growing strong enough. But of course, there are reasons not to raise rates. One of them is that the Australian dollar is weak enough. Around 71, it's sort of maybe the Goldilocks level. Perhaps they want to see it a bit lower, but it's good enough, and they might want to keep the ammunition in the shed. Okay, so most expect the RBA not to move, but it's not a clear cut. It's around 60% expect no move and 40% expect a cut from 2% to 175. So if we don't have a cut and we have the same kind of language from the RBA, it's positive for the Australian dollar. This is the first scenario. If we have no cut and a bit of worries about the Australian dollar opening the door for a rate cut in the future, it's more or less neutral. It's more or less a balanced approach in the middle. Okay, and if we have a rate cut, which will not be a total surprise, but still a surprise, it'll weigh down the Australian dollar. Okay, so these are my 3 scenarios for the RBA decision. It's at 3:30 GMT. We'll talk about it, of course, tomorrow morning, about the results. For those of you who stay awake, anyway, it's a big, very big event for Australia. So far, we had slightly better than expected figures from China. So we have the Aussie dollar recovering a bit, but I believe it'll stay in a narrow range until we hear from the RBA tomorrow morning. Okay, so this is an important event for the Aussie. Let's move back to the screen here. Also, tomorrow morning, we have the Spanish unemployment rate or unemployment change. Anyway, we'll talk, it's not that important. We'll talk about that tomorrow morning. Okay, so looking forward to your questions. And let's talk about some charts in the meantime. Let's begin all the way from the beginning. Euro dollar, the range is clear, 110 to 110.70. Resistance above is 111.30. The post-Draghi crash recovery, initial recovery. Below we have 110, 109.50, which is not that strong, and 109, which was support level below. Really critical support is at 108.10, which was the July 20 low, the post-recovery low in euro dollar after the big crash in March, after the big crash that began last year and continued. So these are the levels to watch. The wider band is 111.30 to 108.10. Okay, pound dollar currently 154.30, resistance 153, support 153.70. We've seen it recovering on Friday, support 153. Okay, dollar yen once again. Well, not trading in a bit more interesting fashion. We did see a challenge 121.40, so that becomes the double top there. On Friday morning we talked about this. The Bank of Japan decided not to change its policy, not to add further stimulus, and so this strengthened the Japanese yen. No new yen printing. The door, of course, is always open, but they repeated more of the same. The government in Tokyo, in Japan, does consider adding more stimulus, so that maybe weakens the yen just a bit, but all in all, 120 is the level, hugging level, 121.50 on the top, 118.10 on the bottom. Okay, or 118. Let's be more round. Okay, so dollar yen is a bit stuck in range. Dollar CAD improving because prices of oil, I think it's unjustified, but they did improve quite a lot, and so we had 130.80 at the current level. 130, of course, is a line to watch. 129 on the downside. Let's see how the price of oil pans out. Let's take a look at the price of oil this morning. So it's at 46.30, above the levels we've seen last week. This low here of 42.60, more or less. Still, the price of oil is still looking for a direction. I believe there's just too much supply in markets, and that's why we could see it fall once again. Anyway, these are the current levels to watch here. Right here, 45, 47, and 47.50. Let's put another one right here. And low support here at 42.50. Okay, now we have, before we move on, we have a question here from Tol. He asks, what's your opinion on tomorrow's Draghi speech? Okay, so we have Draghi speaking quite a few times this week. Let's look at your question at tomorrow's speech, okay? So Draghi speaks tomorrow at 7 p.m. GMT. Tomorrow is not so important, in my opinion, because it's... let's see, he speaks, I think that tomorrow he'll be speaking, well, each time he can say, of course, something important, but not all his speech is, he speaks 3 times this week, and I think it's a cultural event tomorrow. Let me just try to check it out with another source. So, yeah, it's the European Cultural Days 2015 event. It's in Frankfurt. So it's in the headquarters of the ECB, city where the ECB is held, but he might be talking about culture and less about monetary policy. I'm not sure, and it's not market moving hours. So he might surprise, of course, markets and say something crazy. In general, Mario Draghi wants to weaken the yen. We've seen that in the press conference. He might use all his appearances this week to do that. He has more appearances. Let's mention them right now. He's going to speak once again on Wednesday at 9 GMT, just after the show ends. And this will be, well, a forum about opening remarks, ECB forum about banking supervision. And then once again, he speaks on Thursday, if I'm not mistaken. let me just check that out. Anyway, I think he'll try to use every opportunity he has. He'll be speaking also on Thursday at 11:45 GMT. He'll be speaking in Milan, in his home country of Italy. So, well, in general, he wants to see weaker euro. That's the best channel to help inflation move higher, because imported goods cost more, and boost the European economies by helping exports. That's, I think he smiled when he saw the reaction in euro dollar 10 days ago when he provided all these hints. Of course, if euro dollar crashes, if the euro crashes across the board, there's less need for action from the ECB, can keep more tools in the shed. Anyway, I think also on the weekend, he gave an interview to an Italian newspaper, and he said that all the tools are on the table. He kept on the dovish stance. So the big question, is it priced in or not? Is the dovish speech, are dovish speeches from Draghi priced in or not? I think it's partially priced in, but he'll have to be very, very determined. If he's determined enough, I think it can still have a negative impact on euro dollar. Okay, so we have euro dollar in range, and Draghi in the past, even though his words, he only repeated what he said in the past, he managed to push down the euro. So if he doesn't say anything related to monetary policy or is more optimistic, it's of course euro positive. But if he's very determined, very worried about the European economies, then it's of course euro negative. Okay, so I hope that answers your question, Tom. And looking forward to more questions, and we'll move on to more charts. Okay, so talked about the Australian dollar. We have it here at 71.43, 72 is resistance, 71 and 70.65 are support. New Zealand dollar managed to recover. The RBNZ, Reserve Bank of New Zealand, decided not to cut rates last week, and it created this double bottom here at 66.15. Okay, so we have, but because it did talk about that they want a weaker currency, but they didn't cut rates, and eventually, when the mood in markets improved, Kiwi dollar went up, still depressed, still far from the 69 level, and we have resistance here at 68. Let's add this line. A few lines here have changed, and 60. Yeah, so we have three round numbers: 69, 68, and 67, and 66.15 below for Kiwi dollar. Okay, dollar Swiss currently at 98.75. So because of the weakening of the euro, we had the Swiss National Bank intervene a bit to keep euro Swiss more or less balanced, and this means that also the Swiss franc weakened also against the US dollar. So it went up from those lows over there at 94.80 all the way to 99.50, quite close to parity. But since then, of course, the US dollar got off the boil just a bit, currently hugging the 99 level. 98.15 is more support. Euro Swiss 108.80, more or less stable because of intervention of the Swiss National Bank. We had it fall all the way to 107.50. Resistance is at 110, but anyway, this pair is heavily intervened by the Swiss National Bank. Euro pound, because of the fall in the euro, that was the main driver, and the stability of the pound against the dollar, we had it fall all the way from the highs. It was at 75 cents not that long ago, touching 75, now at 71.40. Support is, of course, the round number of 70, and we're seeing it sort of move lower in the range, lower lows, lower highs, all that jazz. So further support, 70.23 and 69.50 are support lines. 72 remains resistance. Okay, so that's euro pound. Euro yen currently 132.80. Also, because of the downfall in the euro, it fell to lower range. 131.50 is support, and 134.20 is resistance. Pound yen, one of your favorites, made yet another attempt. Well, it had a very interesting Friday on these wild end-of-month fixings, so it did manage to break. But this time it made a really frustrating false break, went all the way up to here, up to 186.73. We marked 186 as resistance because it was support back here in September, but now it's back, still battling with this 186 level. Support is here at 184.50 and further support at 183.80. Okay, these are the levels to watch. It's a bit more choppy than it used to be. Okay, so this is these are the major crosses and pairs. Of course, we have lots more. I'll be glad to talk about more charts if you have questions, and we'll talk about the main events for the week. Okay, take another sip of water. So what do we have on the agenda this week? Today we had Chinese Caixin manufacturing PMI, surprised with better than expected numbers. The big event for today, USISM manufacturing PMI. Then overnight, the Australian rate decision. We talked about all these events. We have the speech that Tal asked about on tomorrow evening, actually, from Mario Draghi. Let's see if he talks about culture or about monetary policy. For tomorrow's event, I'll try to dig up more information, but you don't always know if they're going to talk about market-moving stuff. For instance, in the United States, the Fed sometimes uses it opportunities to talk about community banking or things like that. For those of you trading the Kiwi, we have New Zealand deployment data on Tuesday as well. On Wednesday, it becomes very busy. We have a testimony by Janet Yellen. Also here, note that it's about regulatory stuff. So that's what Janet Yellen is expected to talk about. But she'll also be questioned, grilled, if you want, scrutinized by the members of Congress. So they may ask her, for example, about stuff such as monetary policy, interest rates, and things like that. So officially, it's not about monetary policy. Officially, it's not expected to move markets. But when Janet Yellen appears in front of Congress, it can always get wild. So that's the big event for Wednesday. And Wednesday, we also have the ADP non-farm payrolls, the private sector report from the private company called Automated Data Processing, ADP. And they provide a big hint towards the NFP on Friday. And the ISM non-manufacturing PMI, the services sector, and that also provides us with the biggest hint towards the non-farm payrolls. On Thursday, we have a UK rate decision plus their inflation report. It's also dubbed Super Thursday in the UK. We have the meeting minutes, the rate decision, which is not expected to have any change, but also the stuff from the inflation report. It happens only once a quarter, so it has to be supposed to be very interesting. Yeah. So. Yeah, question here. Yes, it is live. What you're watching here, there is perhaps some delay in the time that I speak and when you hear me, but it's just a few seconds. It's supposed to be. Anyway, let's move on to Friday. We have here Jax Arwild mentioning that time change in the United States. Yeah, the US did catch up with the Eurozone and the UK, and now we have again the normal time difference. So for those of you in the UK, it's now back to having UK releases at 9:30 as usual, for example, and the US releases at 3. Okay, before last week it was more crowded when after the Eurozone and the UK moved their clocks and the US and Canada didn't. We had everything more concentrated. Okay, we had US releases earlier in the day. So on Friday, non-farm payrolls, big event. Markets are expecting a gain of 180,000, less than in previous months, but less than the average, which was above 200,000, but better than previous months. And we have a jobs report in Canada as well. So we have a busy week all around. It's relatively busy today for a Monday, and we have, of course, a big build-up. Wednesday is a very busy day, but no day this week is boring. First week of the month is very exciting. Okay, if more questions, or maybe I'll take the opportunity to do a recap. You can't. If your question asks if it's live and no video or sound, well, I think that all the rest here can hear the video, hear the sound, and see the video. Anyway, if you don't have any questions at the moment, let's do a recap of what the Fed did last week. Okay, so on Wednesday, we had 4 things from the Fed that surprised markets. We were expected to hear from the Federal Reserve, and the economy slowed down because that's what all the data showed us. But on 2 fronts, they were not so worried. So unemployment, yes, it slowed down, but it's still growing. Slack is still diminishing. Inflation is somewhat lower, but the long-term expectations, long-term surveys are still stable. More importantly, they removed the reference or changed it a bit about recent global and financial developments. So they were less worried about the crash in Chinese stocks because come October, things were already more stable. And the most important thing is that when they talked about moving the rates, they had a reference to the next meeting. Of course, it's data dependent, unemployment, inflation, even international developments. But they hinted that when deciding on rates in the next meeting, these words sort of caught the market's attention as well. And that's why the dollar rallied following the Fed. So we have another question here from, I think euro dollar will go short, dependent on euro and dollar strength. Yeah, but it also depends on Mario Draghi, and it depends on both sides of the Atlantic, okay? So let's look at euro dollar. So far, I don't think we had extreme movements this morning. We're seeing it weakening during the show, but still very narrow range, 110 to 110.70. It did open with a gap higher, but nothing extraordinary. Yeah, if we have a good ISM manufacturing PMI, this is clearly the main event of the day at 3 GMT, 3 in London, 4 here in Europe. That's the big event. Then we have a stronger dollar, okay? So for today, that's the big focus. But tomorrow we have the first out of 3 speeches from Draghi. So tomorrow it's not only dependent on the US dollar, but also on Europe, okay? So I hope this answers your question. More questions? More currency pairs. But regarding euro dollar and talking about the weakness of the euro, not only the strength of the dollar, let's talk about what we had also 2 weeks ago, 10 days ago with Draghi. Okay, so we had sorry, we had the rate decision by the ECB on October 22nd. That was Thursday. Expectations were high. Expectations were for the ECB to hint about action in December. December is when the ECB has new forecasts, and that's the big deal for when the ECB is expected to decide. But expectations were high, and Draghi even exceeded them. He not only opened the door to extending QE beyond September 2016 to continue printing money after the program is supposed to end, but also to expanding QE beyond 60 billion euros a month to 80 billion, 100 billion, okay? And in addition, he did say that they discussed cutting the deposit rate more than, and that was not expected because he said beforehand that the rates have reached their lower bound. He also expressed worries about inflation, about even a deflationary spiral. He seemed more worried than usual. And he also mentioned, he took his time to talk about the exchange rate, about euro dollar. So that was, of course, another hit for euro dollar. And the last thing is more verbal. when he talked about the next meeting and used the word vigilance. That's the word his predecessor, Jean-Claude Trichet, used to talk about, to hint that in the next rate decision there will be a rate hike. In this case, it's a rate cut, it's more QE. Since then, we know that there is quite a big discussion in the ECB. Some are against more action, some are for. I believe Draghi will have the upper hand, mostly because data is on his side. That means that European economies are not doing that well, so there is justification for a move. Okay, we have more questions, I see. Jacks are wild gaps caused by time change. No, they don't. It doesn't have any impact. And Joel said a possible reason for the gap could be the release of Greek bank stress test last Saturday. Yeah, we had the European Commission saying that Greek banks will need 14 billion euros, 14.4 if I'm not mistaken, of help, and this is already in the already priced in the bailout, so it wasn't new. We didn't have bad news regarding Greece, nothing that we didn't know, but I think the Greek story currently is on the sidelines. So look, it's not such a big gap. We had wild moves on Friday because of the end of month fixing. We had euro-dollar rise without any data all the way to 110.70 and then fall, even dip below 110 when the fixing ended. So now we have it move back to the middle of the range. And also note that also on pound dollar we have here a very small gap. So anyway, euro-dollar jumped around 30-40 pips. We didn't see gaps in previous weeks, but it's not really extreme. So for a while the gap hasn't been closed, but we're not that far from that. Okay, question from Tillen. Hi Yohay and everyone. I see bankers via EFX are pointing the euro way lower again after they were almost calling it long a few weeks ago. So do you have the same opinion in euro-dollar direction for midterm end of 2015, first half of 2016? And then a question from Jack. So, well, at this point, I can't believe anything Greece does impacts markets. So regarding the first question from Tilan, only HSBC was one of the only banks that saw the euro-dollar rising beforehand, and I haven't heard from them. All the rest were also calling for shorts. Banks like Goldman Sachs were, repeating their calls for 95 cents, 98, things like that. So most banks were always talking short, and they were exaggerating, and they always pushed back their forecasts. So now they get to be right, and I agree as well. I think euro-dollar has a bit more to fall. I'm not sure. Perhaps we'll have a dip below the yearly low, the 12-year low of 104.60. But maybe we'll close a bit above that. I believe that Draghi will, currently as I see it, Draghi will announce lots of measures, and in the US, even if we don't get a rate hike in December, it'll be good enough for euro-dollar to dip below 104.60 and perhaps close the year above this level. First half of 2016, let's talk towards the end of the year. I believe that eventually, after the US raises rates, euro-dollar can change direction and actually rise. But it's not so soon, okay? And so I do think euro-dollar has a potential to fall, dipping below the previous lows and then stabilizing perhaps. Another question here from regarding Greece. Greece is currently on the back burner. We talked about that in the show a few times. It does have an impact on markets. Very little at the moment, but it's always there, and that it can always make a comeback. I believe that this month in November, we're expected to hear not only the bank stress tests, but also the first review, and also to put the big elephant in the table, in the room, the debt relief. Okay, so according to the third bailout deal, the issue of some kind of debt restructuring, debt haircut, or debt in general is going to be on the table after the first review. And that's, of course, a big issue for Greece, the debt is unsustainable. Everybody knows that, and the IMF is not ready to participate. Currently, it's not participating in the bailout of Greece because of the debt, and Germany wants the IMF in, so things will still get complicated. So at the moment, Greece has no impact, but it's only temporary as I see it. Okay, another question from Jack Sarwell. I think gaps are from server resets to time change. No, well, it could have some impact, but clocks are moved every 6 months, more or less, every 4 to 8 months, all over the world. It's not something that computers have an issue with. It's just normal weekend gaps. Okay, and Tilan says, thank you. I agree with all you said. Okay, you're most welcome. Any more questions? I will get soon to the wrap-up of this show. So we have here Draghi, we have the Fed. Just to look at the bigger themes in markets, Fed to hike or not to hike again. Now it seems a bit more probable. Let's look. I've shown you this tool in the past, and for the newcomers to the show, the countdown to the FOMC, the CME's group probabilities. So now markets are pricing in no hike. Bond markets, the implied probability says 53%, no hike, 46 hike. Very, very close. We'll see it moving throughout the week. Okay, other big themes in markets are, will the ECB be forced to act? The answer is probably yes, or surely they'll act. The question is how much. Another question, what's going on in China? So the Chinese government is sort of trying to tell us that it's business as usual. BOJ, well, that didn't happen. And Greece extend and pretend. Another big theme, we just talked about that. It's still going on in markets. Okay, so let's see if we have, I think we can get ready for the wrap up for today. Yeah, okay. So this is the wrap up for the live market open on Monday, November 2nd. The first day of the new month. It brings lots of excitement. We have lots of action coming up this week and already today. So previous data we had was some better than expected data in the Eurozone, didn't help the Euro too much. Lots of US data didn't move markets. And then we had Chinese PMIs. That was actually surprising because we had better than expected data from the private sector and worse data from the government number. So all in all, it's good news for the Australian dollar. I think it's the biggest market mover so far this week. So we see the Aussie dollar recover within range. 70.64 is the low, 72 is resistance above. Today we have coming up Eurozone final manufacturing PMIs, the UK manufacturing PMI, which is more important. We're expecting to see more of the same there, but any small surprise can move markets. The range is 155 on the top side to 153.70 on the downside. We'll have that just after the show. At 3 GMT, the main event for the day, ISM manufacturing PMI. It's expected to be exactly at 50 points, exactly on the borderline between contraction and expansion. So this is a key event for the US dollar across the board. So if we look, for instance, at euro dollar, it's now entrenched well within the range 110.30, 110.28, 110 to 110.70 is the narrow range, above 111.30, and on the downside 109 and 108.10. Okay, we have the big event for tomorrow is tomorrow morning, the Australian rate decision. Most expect no hike, but it's very unclear what will happen. It's definitely a market moving event. We'll talk about that tomorrow. If we have a rate cut, Aussie negative, no rate cut, it depends on the statement. An upbeat statement, Aussie positive. If they complain about the exchange rate, it's more or less neutral. Okay. We have dollar yen clinging to just above 120, a bit above, but not going too far. 118 to 121 50 is the wider range. Dollar CAD around 131, now rising a bit. Let's see if oil prices fall. I think the rise was unjustified. And Kiwi dollar 67.50, supported 67, 66.15, and 68 and 69 are resistance line. So all in all, we have very small gaps. Now all eyes are on the ISM on this ISM manufacturing PMI, on the Australian rate decision. This week, of course, we have the non-farm payrolls, and we have the first event for today. The buildup begins today with the ISM manufacturing PMI. So if nobody has any more questions, I want to thank everybody for the show. Thanks for coming. Thanks for the questions. This was what makes the show what it is. Looking forward to see you all tomorrow. Don't worry, those gaps are not that big. I believe that we'll forget about those gaps quite quickly, and because we have really important events down the line. All important non-farm payrolls is the big event for this week. Okay, so thank you everybody for coming to the show, and wish everybody success in their trading day, and see you tomorrow. Bye bye.